The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Yes, I am the downy host. Oh, can't you smell that spring freshness? Anyway, got another wonderful day out here. We got the S&P up less than a point. Of course, it was up to 1887 and change, almost 1888. Earlier today, we've got just over 2 billion shares. Every time we get up pretty much past about 1884, all the dip buyers disappear and the market rolls right back under. Of course, what they're telling us over the last 2 days was that the morphine IV drip of incredibly huge accommodation was going to save the day once again, make the market break out. And what do we got? We're pretty much right back to where we were, maybe 10 points higher. Of course, those dip buyers come in every time the market goes lower. They really don't do a lot, though, when the market goes higher. That could be one of two things. One, we truly have dip buyers that will buy all day long on any dip. Or two, we've got a market full of street folk that want to keep this market up while they sell out to it, and that's called distribution. Well, the proof will be in the pudding, as they say, in the very near future. And I'm still, for the most part, Grizzly Adams bearish on this market until we see some sign of strength that would show that this market is wanting to break out. And on a sign of strength, that means with some volume. Right now, all they're doing is toying with us. And I wish they would stop. And, too bad we don't have the anatomically correct doll of the market. We could ask them where they've been touching it. But anyway, I digress. We are looking at a market. Well, let's see. Take a look at it here. Just wanted to take one more look. Oh, only up 65 cents now on the S&P cash. But I've been watching the market pretty much all morning and seeing that most of these big high flyers, at least the last rung of the high flyers that had some decent rallies over the last few days, IBM, IBB, Apple with its big run. Those are the stocks that I'm watching. Are they getting any kind of traction when they come up and move higher? And the answer so far is no. And that's why I am remaining Grizzly Adams. I'm going to just put a picture up of Grizzly Adams from here on out. Maybe I'll just get a Grizzly Adams mask. That would be interesting. So I'll have to do that. So anyway, we've got a market out here that is interesting to say the least, frustrating to say the worst. But we shall see what happens. We do and have looked at options already this week. Nothing really changed over Tuesdays and Wednesday. There is a wall higher and a lot of room to go lower for options during this options expiration cycle. Doesn't mean we're going lower. It does say the probability for a lower expiration is much higher than usual. It also shows that we probably, the street is not thinking that we go much more than 10 or 15 points higher on the S&P cash through expiration. So could we just hang out here and go sideways again for yet another week? The answer is yes. My guess, though, is no one's going to like today, and just really need one more good close below 1868, probably to finally put some dynamite under the bulls who've been buying every one of these dips and get them to start selling. And Andy Heck says, I'm starting to look more like Grizzly each day as my beard grows in. But it doesn't grow in because I use the mower on it every day. And, maybe I forgot the throat today. It is interesting. Anyway, still just, we're negative on the day on the S&P cash. So we'll continue to keep a look on it. Gentle Ben? No. Grizzly Adams. Gentle Ben was another one. That was trying to remember the guy's brother. Remember him? He's in Apollo 13. I bet him. Trying to remember his name now. I'll think about it. It's Ron Howard's brother. I just can't remember his name. So anyway, we are looking at a market that's moving. And of course, we are going to start off the day with a little bit of history. In 1886 today, the soda fountain of Jacobs Pharmacy in Atlanta, Dr. John Pemberton sells the first glass of Coca-Cola, his new tonic beverage. It originally popularly may come partly from the fact it contained trace amounts of real cocaine and extract from the African cola nut, a stimulant and a thirst quencher at the same time. And from everything I remember about the history of Coca-Cola, it was more than a trace for a while. Once they figured out what it really did, they kind of worked on having a little bit more Coke in that cocaine in the formula. But I think, what was it, 1910, 1915, 1920, when everybody were cokeheads, that they forced them to take the cocaine out. And we got new Coke in 1920. Not the new Coke from the 80s, but the new Coke from the early part of the century. But it is interesting. But 1886, I kind of wonder about how long products can actually live. And no, I'm not Dan Haggerty. We've got everybody putting in their 2 cents in the different rooms out here. But it is interesting. But I digress. Alibaba is coming out with its IPO. Got to dig through the prospectus last night. We talked a little bit about that. And what I am interested about is at the very beginning of an IPO, if you don't know, if you haven't been through it, if you're not real versed in it, I'm going to go through just a little bit of it so you can see what happens in an IPO and what they tell you about what's going to happen to their company and or possibilities of things bad happening to the company and good. But first of all, I've got a nice slide up here. Hopefully it works fairly well and everybody can see it. It is a kind of graphic about all the different businesses that are under the Alibaba.com banner. AliExpress, a retail marketplace at consumers worldwide, a buying site for China, platform and cloud computing management, and what else? Thousands of international Chinese brands, ex-Apple, Unilever, Gap, Ray-Ban, Nike, and Levi's. Alipay, which is kind of like the eBay. They've got Toubao, which is it's kind of a shopping platform, probably more like Amazon than anything else, and a wholesale marketplace for domestic China trade among small businesses. So they incorporate a lot. Started in 1999. This thing has moved up. And, of course, the single biggest investor is the gentleman that owns SoftBank. I can't remember his last name right at the moment, from Japan. He's going to cash out to the tune, if this IPO went through as written a couple of days ago. And, of course, none of them do. They all get revised after they give them to the SEC. But we're going to look at it. But the what we do know about this is that he's going to walk away at least with a stock somewhere in the neighborhood of $20 billion. And that was from the start of a $200 million investment. So that guy probably not going to be doing too many passing and trying to sell pencils on the street corner. But it is what it is. off almost 2 points on the S&P cash right now. But it is interesting. Okay, so we've got a big company. It's got all these different companies. We've talked about how all these companies are basically in shell companies, in holding companies, and most of that has to do with because of the way corporations work in China. But when you dig in to the page, I think it was page 42 in the IPO. I have the link for that, by the way. I'll try to post that in the den during the break. And if you want it, you can always email me at tfnn.com. I highly recommend that you read at least one IPO prospectus. This would be a great one since it runs about 300 pages. But it's got probably just about everything you want to look for in a prospectus that may be throwing you a curveball. But at least a good one to kind of breeze through and figure out. Here are the main points that I've found in that prospectus. They are not required to have a majority of its board to be independent. Basically, they can be told who the board is by the Chi-Coms themselves. It does not have to file reports and financial statements with the Securities and Exchange Commission as frequently or as promptly as American companies. Unknown why they state that. Conflicts of interest may arise due to dual roles as both directors and executive officers of the variable interest entities. And when we're talking about all these different holding companies, that is the legal term they're calling them over there. That is the variable interest entities. The last thing I put down here, I just can't figure out how they get this past the SEC. And of course, the SEC won't call me back. The biggest accounting firms in China are all on double secret probation already. It's unclear how this is going to make it through at all. But this is in the perspective, and I'm going to read it verbatim. Is not subject to full inspection by the Public Accounting Oversight Board because Alibaba does most of its business in China. I don't understand where you do business. If you're listed on the New York Stock Exchange or the NASDAQ, it doesn't matter where you do business. You're going to get full inspection by the PCAO. But they say they don't. So the question is everybody just going to look the other way? Is someone going to say nothing? But the whole thing is that you're not going to really own anything. You're going to basically own a company that owns all of these variable interest entities, companies that are now owned by one gentleman that's worth about $10 billion in China. So the question I have is, what in the hell are you really buying here? And is this just Enron because everything can be off the books? Anyway, we'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, here we go. Let me get this. Oh, what happened here? Huh? This is weird. Okay. Anyway, if you've never seen one of these IPOs, it is called a Form F-1 registration statement, and there'll be amendments to this, and there's a registration number on it. But for the most part, you get into this a little bit, and you start seeing basically some PR at the very beginning of it, and then you're going to get into the details of the company. It certainly is growing like a weed if you believe their accounting. The question is just how far in the future are you going to look at that? I got people in the den. I got emails coming in. So we got a lot of stuff to talk about today. Just a few more things. Yesterday we found out that if you contributed to a particular political party over the last couple of years, you were 10 times more likely to get audited. That the senior members of the investigating committee were asking for tax returns and names from the IRS, and the IRS did comply against the law. So we've got House members getting involved and getting and on the same panel investigating the IRS. But I did work out the odds. There's one chance in 136 that this would be pure chance. So if anybody tells you that nothing's going on, I'm willing to bet on the other 135 chances that it is more than that. A 10-time higher chance of getting audited pretty much tells you everything you need to know. There's an ongoing criminal conspiracy in the IRS. The Justice Department, I guess, is the bag man for them because they've done nothing. So we've got something that's probably worse than Watergate going on. And in this political climate, in an election year, we're probably going to hear a great deal about this. But I just thought that I'd bring that up because it concerns us all. No one wants to be persecuted for their political beliefs, and I'm sure that everybody on both sides of the aisle will agree on that and demand that the Justice Department really go after these folks and find out what's going on. Amazon is announcing a Sunday same-day delivery. It's also going to work with the United States Postal Service to do the same. And it's kind of weird. Of course, we just saw Google push out some Saturday delivery. And now Amazon's going to Sunday. So basically, you're going to have 7-day delivery. And if you can get your order in and they've got the product locally, if you're in Manhattan, if you're in some parts of California, you're going to be able to get the product delivered to you in probably about 4 hours. Kind of different than what you would always thought was going on. But it is interesting. And I think that's all it for the snooze today. As always, when news breaks, I'm here to fix it. And we'll get looking at some charts here right now. Toot sweet. And the first one is MCP. This thing pretty much failed last night, down to $3.67. When I looked at the earnings and went through them, I was actually hoping this thing would just kind of go sideways here for another few months, and I'd be able to pick this thing up on the cheap. But it looks like it's going to have to go through consolidation at a much lower price out here. China continues to dump rare earths, and that is hurting prices for rare earth minerals. But also some of the things that they're doing, kind of like the same kind of things happening in the gold miners, just don't make a great deal of sense. I like this company because it does have the backing of the United States government, so I don't think it's going out of business. We just need to find some place in this thing where it actually finally levels out. But a lot of losses in this thing, and my guess is that you want to watch this for the next time that China rattles its swords, and you can probably see a huge move in this thing. Of course, it actually gets these rare earth minerals out of the ground. Most important, neodymium, which is used in magnets for electric cars, magnets for smart bombs, all kinds of other uses in cell phones for some of the stuff that they have. But down on heavy volume, the heaviest volume down day, no. But it could be maybe the third gap out here, and maybe that's what they're talking about. We'll be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Got a caller, or actually a writer. Is that what we call him? A writer? It's hard to say. Writer, an author, an emailer. Kind of hard to say what that would be. Hang on a second. Why does this do this all the time? I guess it'll just have to be that.
You've got mail.
Mail. Hey, it's Martin. He's asking whether or not Amazon will bounce out of here and will this be acting as support. And there's a nice little gap out here. It hadn't gotten into it yet. My guess is the answer is no. What you could probably expect if we did bounce for Amazon is this big gap from about 337 down to, 318. That gap happened on the 24th of April. And, you had heavy volume in that. You probably come back up, and this is got a smaller little gap from the 23rd when it came at before earnings. So, maybe best case scenario, you'd be looking at 325. And with this market moving like it is, I would not want to be long very much. We're up 1 point on the S&P cash, but this is the kind of market that's probably going to gap away at some point. And that's going to be rather problematic for most of the people out here. But we will watch. 2.26 billion shares on the New York stock consolidated thing. And what else do we have? I've got somebody else emailing.
You got mail, baby, yeah.
Well, thank you. And see, if one has a confluence zone that's 1.3 wide between the 382, the 618, and you had orders to try to execute, what percentage would you? Oh, I have no idea. This is starting to give me a headache already. Maybe I'll email this guy and try to figure out what he's actually asking here. But this is a tough question to answer on the fly. Yes. It says, ideally, one wants the confluence zone to be as narrow as possible. Please let me know. If the confluence zone were violated, how much tolerance would you allow to stop the trade out? Okay, I think I got an idea what David's asking about, and that's if you have a confluence area, and I don't know if I have a stock set up here to do it, but normally what will happen is you'll get probably a 1 or 2% penetration of the confluence zone, and then it closes back under that level, and then you can pull the trigger. Or you probably, but generally that's the way it will happen. And so you don't have to give it very much room. I like to wait for them to go through it, pierce it, close back below it, and prove the point that confluence zone is, well, I think maybe I can think of one here. IBB, I think, is a good example. Maybe I can get it up here. And what you're looking for in the retracements, what do we have here? 6 months, maybe it's not 1 year or 2 year. No, it was narrower than that. So I'm trying to figure out what's happened here. Maybe it's in that 2 years, 1 year. Oh, bingo, there we go. And we'll show it right here. This is kind of what you get normally in a confluence zone in IBB. And this is a great one. We talked about it on the air, so it's a big secret. But it is exactly what you're looking for. This one has a $3 range on a $230 stock. So 1.5%, 1.25%. That's pretty much around the range. When I do scans for these, I normally look for 1% or better. This is pretty volatile sector, so 1.5% is incredibly good. It's acted as that resistance 2 times, and here's exactly what you are looking for. To pierce it, which it did on that April 22nd, the next day it instantly fails, and we could go back into the volume patterns, but for the actual price patterns, what you're looking for is that $233 to $230 range on IBB to pierce it, come back in, and then it's not uncommon to see these things kind of come back up here and try again. It did on May 1st. And then normally after your second try, if there's no volume, first time you had 3.9 million shares, you get the 1.8 million shares, which is, of course, half of the first time it traded up there. So probably a pretty good indication that there isn't enough energy to blow this thing through. Even the big retracement candle you had where it opened lower and went to a higher on 1.4 million shares on the 5th, pretty good indicator. And, of course, now you've got kind of an interesting little, what are they going to call it, a dragonfly out here. But we'll have to watch how this does the rest of the day. But once again, back into that higher level without a lot. And, of course, IBB's off, $2.50 here on a day where the market's not moving all that greatly or that great. Same thing with Apple. You're seeing this thing trying to push higher today. Got to a high of 593 and change. 593 and a half. A lot of these higher flyers are what I'm watching now. IBB, Apple, IBM. These are the stocks that should be rolling and ready to break out if this market was going higher. I just don't see it, and we'll be looking at some other stocks yet today. But good example of exactly what you're looking for in the action of IBB if you like it. Okay, but that's pretty much what you're looking for. Okay, what else do we have going on here? Tesla, TSLA. Tesla is another one of these companies that we talked about that had three large gaps, and it was part of the three-gap play. If we go back here, I think even farther, this thing shows up. Yeah. I mean, you had three really significant gaps. I think the one up here at the top was the third one that got filled some time ago. But you've still got two more major gaps out here that could take this thing right back to that about $58 to $68 level. And my guess is eventually it is getting back there. What we did see from earnings last night is that they can't get enough batteries. And, of course, they're talking about building a huge battery plant. That huge battery plant is probably going to be margins. Some people are telling them to get out of the car business, get into the battery making business. I think that's just equally stupid. The problem is there is not enough lithium in all the world to make cars with rechargeable lithium-ion batteries. You're going to have to find something else out there. I, of course, think that the answer one day is going to be supercapacitors. It answers all the problems with batteries, save one, which is how to get the density to fit it in a car. That's got a lot of work going on to it. But one really understandable problem, and that is how to fit a lot of surface area into something that's small. Graphene may be the answer to that. There's several colleges that have published papers where they're getting orders of magnitude better levels, but nothing out now. And, of course, if that came out, wouldn't give Tesla a huge advantage if they just spent billions on a battery plant where there just aren't enough mines in Chile to bring out lithium ion for the world. Lithium ion from asteroids. Well, you could put both of Elon Musk's businesses together, but lithium is pretty much one of these metals. Just like gold, silver, a lot of these other heavy metals. And if you understand or spend any time in your science class in high school, in the last few minutes, basically in the last 2 minutes of the life of a star as it goes and becomes a supernova, it inverts itself. The inside core, the heavy part of the core, where a lot of the heavier metals are, goes from the inside out to the skin of the star. So it kind of inverts itself, and in that last 2 minutes, it continues to make more and more heavy metals. Everything above iron, especially iron, tends to make the reaction moderate. That's why they use iron control rods and cobalt control rods in nuclear reactors. But basically, it goes into overdrive in the last 2 minutes. In the last 15, 20 seconds, you get gold, you get platinum. That's why there's so little of it. Stars made internally in the stars just doesn't do a whole lot. But same thing with lithium. It's one of those that is made at the very end of the death of a star. It's not like helium or even oxygen. Those may have 30, 40 years in the last life of a star where they're actually making those elements. And that is the problem. There just isn't enough, and that's why most of these things are called rare earths. A lot of research in trying to figure out how to make lithium work much better with a lot less of it. Maybe that will help somebody like Tesla. But they've got several problems. None of the least of it is getting enough lithium ever to make a car company viable. And if anybody's listened to me on the show, they already know that and have read my newsletter. I've already talked about all the problems that Tesla will have as a company. Very easy to spot out there. But this thing's probably headed back down to fill this gap about the 130 level and probably consolidate out and probably get ready to go down to that $58 to $70 level probably soon enough. But we'll see. A lot of volume today. There'll be some people buying this thing on a dip, but it will be. Asteroid mining not as far-fetched as I suspected. The rollout of new space race is evidence of something. Huh. Probably not in my lifetime. Yes, not in our lifetimes. And, space mining will be interesting because you'll basically go out and find an asteroid or something and try to alter its trajectory so that in 250 years that asteroid comes by Earth. To actually physically push it over here, problematic. Probably 20 times what you would actually get back in any of the minerals in an asteroid. Two, a lot of those asteroids are nothing but iron. And, it's $1 a pound down here. Just doesn't make a whole great deal of sense. And no, not in your lifetime. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can put a message in the den, and I will try to get to it. A lot of stocks out here moving. Wanted to take a quick look. Is it Boeing? BO? No, it's not. What's Boeing? Why do I have a mental blank today? BOE. BA. The Boeing company. I've been watching this one too. This thing came down, had a lot of volume, came back up to its gap. I know a lot of people have been talking about shorting this company. I didn't think that there was a lot to short in it. Still don't, but if you are looking at it, this is one of the charts out here. It did come up there with just a slightly lighter volume than the March 4th high, coming back trying to fill this gap. That gap that did come down on the 29th of January had, 16 million shares, and you're getting into it with about half. So I could probably see some reasons that you might think this would be a short opportunity. I just think that there are probably a lot of stocks out here that could fall apart more like Tesla than Boeing. What you're probably looking at this 118 low out here, which is not bad, maybe 10, 14 bucks. So you're talking about 14%. You'd have to make a case on why Boeing's planes are not going to sell anymore. And they've got 7-8 years worth of orders. I would say that it close to 4. They'd probably get the other 4 years of orders back after everything cycled back around. So I'm not a big bear on Boeing. They are one of the only companies in the world to do what they do. They do it well and much better than Airbus without massive intervention with the government basically keeping Airbus in business. So I think they are kind of like in the computer business in the 90s with Apple compared to Microsoft. Apple was in business, stuck with 10% of the business. Of course, Airbus has a great deal more of that business because they push it on everybody. But I think Boeing out here probably has topped out, but a lot weaker out there in the better fish in the ocean. Be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And somebody emailed me, looks like Ron from Poughkeepsie. I don't know where he's from. He didn't tell me. Anyway, was asking about how to play these mines. And these miners, even though it is problematic getting the lithium, have the same problem that gold miners have. They've got gold in their hills. It's expensive to get it out. And the countries and people around the countries all have their hand out, and they make more money. They just get more money taken from them. So I guess Chile is a problematic. I don't know enough about how the miners work down there in Chile. But it is problematic. One of the biggest one is SQM Chemical and Mining Company of Chile. And for the price that continually goes up on lithium, the profits continue to go down. And that may be an issue. But you can look at SQM to play or for a play on lithium. You can also look at LIT, which is the Global Lithium ETF. And again, same kind of thing on this. Looks a little bit better than SQM, but I have a feeling there's probably all those minor problems, which is, who's got their hand out. Maybe they've got their own Putin down there in Chile, but it is interesting. Sent an email to Andy, who's coming up here in just a minute. And I was kind of interested to notice that Potash Corporation of Saskatchewan had pretty much come down. This huge gap down was the Russians dropping the chalupa on prices for fertilizer. And, of course, really rocked the market. It's tried to come back up and fill this gap twice, this time with even a lighter volume than the last time. We had 18 million shares when we go back and look at the January 15th high. Of course, now 6.4 million shares on that huge down day of 106 million shares. And I was asking Andy if he saw anything in this, if we could read anything. Maybe he'll answer during his show. But an interesting chart nonetheless. You know that normally these things will come back and fill gaps, even to the upside. But this, to me, looks somewhat problematic with the light volume. It may be just in a lower trading range out here, or maybe all the problems with the Ukraine have meant that people are willing to spend that money on fertilizer. Maybe this thing, maybe the downside is over for these fertilizer companies, and we can get back into it. So I'll be interested to hear what Andy has to say about potash and some of these other miners after the break, and he starts his show. But it is interesting. So we had pot. What else did we have? We had Boeing. I had the thing right there. There was else out here that I wanted to talk about. Maybe it's UCBI. There are a few out here that are making lows that are interesting on a lighter volume, but to tell you the truth, most of these are in trading ranges, and I guess maybe you could play the trading ranges in them. Volume does get low down here at the lows, which is fine. The energy on the downside, though, especially what we're looking at now, is the United Community Banks, UCBI. There's a few of them like this where you just really want to see a lighter volume out here. There's some that actually have some fairly decent long-term buy patterns. Shutterfly is one, SFLY. And when we look at this, interestingly, it is coming back and trying to fill a massive gap up with 8.1 million shares, with 1.1 million shares. So if you're looking for stuff to bounce, maybe you might want to look at some of this stuff and veer out of the more well-known names. I think that there's some great opportunities out here, even if I'm right about the market headed down. See you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.